Hi, this is Michael Kramer of Ma Capital. Today is Tuesday, December 17th. It's around 4 o'clock New York time. So we're coming down the home stretch. There's a couple of more days worth of news and events. And then once we get past this, we'll be heading into the final stretch of the year. And I want to wish everyone, obviously, a happy new year. I hope you have a wonderful holiday season, and we'll see you at the start of next. But in the meantime, tomorrow, of course, we're going to be getting the Fed meeting. Rate decision is expected 2 o'clock Eastern time. Expectations are for a 25 basis point rate cut. We're also going to be getting the SEP, which is a summary of economic projections. Again, it looks like based off of where estimates are, it looks like analysts are expecting these long-run rates to come up a little bit. I would pay attention to what the Fed shows on their dot plot for next year. It looks like analysts are only looking them to remove one rate cut from the equation. Anything more than that might be seen as hawkish. Also, the long-run forecast is very important because that's seen as the neutral rate. 3% is currently what expectations are. Then, of course, on Thursday morning, we'll get third quarter GDP revisions, initial jobless claims, and then on the 20th, which is Friday morning, getting PCE report for November along with consumer sentiment. And we're also going to be getting other news the rest of the week as well. We're going to have the BOJ meeting that's going to conclude on the 19th. Expectations are for no rate hike currently, but based on some of what I've been reading, I think it's a little bit, the odds of a rate hike are probably a little bit better than what the market's assigning to it, and we'll take a look at why I think that is in a minute. And then also we have the BOE coming up on Thursday as well. But before we get to that, we're going to obviously have the CPI report that comes tomorrow in the United Kingdom. And we already saw the results of the wage growth numbers that were seen today, and that sent gilt rates significantly higher. We don't normally talk about rates, but when we look at what's actually happening in the UK gilt market, it's really interesting, and this could have big ramifications for where the BOE goes from here, and more importantly, perhaps where the pound goes. You can clearly see that the 10-year in Britain is butting up against resistance levels that go all the way back to that Liz Truss moment in September of 2022. And when you look at the 30-year, it's also a very similar look. So this has implications because clearly if you were to get, a hot CPI number, let's say, you could really see the British back of the curve really move sharply higher. And interestingly, the reason why it's potential that we could see a rate hike out of Japan is just because we're also seeing rates in the JGB market moving higher as well. In fact, it almost looks like, on the 10-year JGB, like you have this flag pattern that's formed that's getting close to a potential breakout. I mean, it depends about what, it will depend on what the BOJ says. It could be that the market's positioning for rate hikes later this year, but the bond market there almost looks like it's prepared for a rate hike to come very soon. And when you look at the 30-year in Japan as well, again, kind of butting up against its highs that were seen in June, and you could also make a case that there's also a bull flag forming in this pattern as well, which could be really suggestive of a market that's looking for rates to go significantly higher globally at this point in the UK, in Japan, and perhaps even in the US, because we've seen rates in the 10-year here also kind of break out and start moving higher. In fact, last week, the 10-year in the US rose by almost 25 basis points, which was one of the biggest moves we've seen in a week in about a decade. So again, we're seeing significant movements in interest rates globally, and it's very interesting to see this taking place at a time where most central banks are actually cutting rates. And it's an interesting message that the market is sending. And so given that, when we look at the pound, tomorrow's CPI data plays an important role because all of a sudden, perhaps the BOE is not going to be cutting rates as much. Perhaps this data comes in hotter than expected. Perhaps we really see UK rates moving sharply higher. That could actually help to reverse the pound's recent weakness and actually start pushing it higher again. Because basically when you look at this chart here, you can start to make a case that maybe the pound has actually broken out of this downtrend, come back and tested that breakout, and now we're bouncing off of it. Additionally, we're clearly in a position to be making higher lows here, and there's clearly been a reversal in the momentum on the RSI, and we've also seen the British pound now close above the 10-day exponential moving average. Again, we've seen the British pound get up to this 127 area a couple of times, 127, 128, and fail. So if we take another pass at this 127.5 to 128 region, and we're able to surpass it, that's obviously a very bullish indication for where the 10-year and that's very much a potentially bullish indication for the pound, and it could lead to significant strengthening in the weeks ahead back towards that 130 level. The yen, as we were talking about last week, has really moved back to this 61.8% retracement level, and that's for right now has been where it stopped. So again, clearly, if you get a rate hike out of Japan, which is not what the market is expecting, that would clearly lead to significant strengthening of the Japanese yen. And again, I think watching where these JGBs trade going into that rate decision may give you a little bit of a better sense of what the market's really expecting there, because it doesn't really seem like if we were expecting a rate, if we were expecting inaction from the BOJ, that you would be seeing this big move up in rates in Japan ahead of this announcement. And if we were to break this 150-270 area, it would open the door for us to move back down to this 149.25. The euro is really the only one that seems to be languishing at this point. Obviously, the big area of support continues to be around 105. If we break the 105 area, again, we're talking about a potential retest in this 103-ish area. But anything else, we're talking about a potential retracement to 106. Clearly, the momentum is still very negative. It doesn't really have that same feel to it that you're seeing right now in the British pound, at least. So if we take a look at some commodities and take a look at copper, copper is interesting to take a look at. And the reason why I find it interesting is because a lot of people have been talking about, China and the stimulus and this and that. People have been talking a lot about the China stimulus, and they've been waiting on eggshells, it seems like, for this news to come out about when China is going to stimulate. But in the meantime, copper doesn't look very excited at all about the China news. In fact, copper is back to really its lowest level now since the beginning of the month. And it looks like at this point we're getting ready to break lower and perhaps move back down to this 4 area, perhaps even back on this way to this 390 region. There's clearly a downtrend here. We're back below the 10-day exponential moving average. Until we break this uptrend here and you get above 430, I think you're looking for further downside in copper. And also gold. Gold hasn't really looked particularly well. This is the long-term uptrend that's been there in gold. Gold basically got to that 2,700 area we were talking about last week. We've now failed there 2 times. And it looks like the big level to watch in gold will come around this 2,600 region, or break a 2,600, sets up probably a bigger move down to 2,500. Again, as long as you stay below 2,700, I think the bigger risk is a move lower from here. When we move over to European stocks and we look at the DAX right now found support today on the 10-day exponential moving average. Again, the DAX was very overbought last week. We talked about potentially seeing a sideways consolidation. We pretty much have had that now. This is obviously a big support area, because if this breaks, we could see a further pullback to the 20-day in this 19,850 area. But really, the bigger area of support probably comes somewhere around this 19,400, which was a region of consolidation for some time. I honestly was very surprised we even got this move higher, but we did. So right now, your 10-day is kind of your line in your sand in terms of deciding whether or not this thing is going to bounce and try to retake new highs or continue to move lower. The FTSE has made another big move back down again. And, the FTSE has just been doing what it's been doing now for a really long time, bouncing back and forth between 8,000 and 8,350. Now we're back to 8,200. A break of 8,200 probably results in a move back to 8,000. Or if we bounce at 8,200, we're probably talking about going back to 8,350. There's really just not much to say about this chart. It's just been ping pong back and forth. and it's probably been one of the easier ones to predict until something materially changes. I wish, though, I could say the same thing about the NASDAQ and the U.S. indices. Here's the chart of the NASDAQ. Again, RSI got over 70 yesterday. We hit up against the upper Bollinger Band. Ideally, this would be a great place for the NASDAQ to just kind of stall out and catch its breath. Again, extremely overbought on different metrics. The weekly chart shows you that it hit up against this upper Bollinger Band earlier this week. RSI approaching 70 on the monthly chart as well, showing you we're hitting up against the upper Bollinger Band, RSI above 76. So when you look at this thing on multiple different levels, you're looking at an index that appears to be overbought and probably really just needs to catch its breath and consolidate. Again, we've been playing with different variations of rising wedge patterns in the NASDAQ now for some time. It doesn't look like there's really much room here for an upside move, just because it looks like the upper Bollinger Band is trading somewhere around 22,200, while your support is somewhere around 21,650, and potentially really the bigger level would come around 21,150. The S&P has been trading sideways. Today we closed just below the 10-day exponential moving average. We've been flirting with this level on a couple of occasions. You could start to make a case that maybe we're putting in lower highs here, but the big level here that we need to pay attention to on the S&P really comes right at this region at around 6,030. If we break 6,030 to the downside, you're talking about potentially breaking 6,000 and potentially coming back into some of these lower areas here. Otherwise, we're talking about maybe filling a gap around 6,075, which was really just created today. But you can clearly see that we had this big rally into the close, and it's not unusual sometimes to gap below that and take that out early. And so with the Fed meeting tomorrow, there's a risk that you see implied volatility ramp up into the meeting, and that pushes the market down. And then perhaps later in the day, probably around 2:30 Eastern, once you get past the Fed meeting and you'll see implied volatility move up throughout the day. And then once we get past that meeting at 2:30, 2:45, implied volatility starts coming down quickly, and that could propel the index higher again. So I would watch for support around 6,000 with resistance somewhere around 6,050. Ultimately with a retest of maybe 6,100 possible over the next couple of days. And then finally on the Dow, this has obviously been really struggling the last couple of days. One of the reasons why is because you've seen, UNH, which is the biggest Dow component or was the biggest Dow component, really get hammered the last couple of weeks. You've also seen, Goldman Sachs kind of stall out the last couple of weeks. These are two of the largest components in the Dow. Clearly the Dow has just really kind of moved away from where the NASDAQ and the S&P have been trading. You can clearly see very bearish sort of price action on the RSI. Clearly the uptrend is broken. So right now you're looking for an area of support. The lower Bollinger Band comes around 43,200. That would make sense to be the next area where you would expect the Dow to at least catch a bounce. Right now it's been down about 9 days in a row, so at some point it's gonna bounce. And again, this seems to be an area where you would expect that to happen around 43,207. Otherwise, after that, you're talking about really no support until 41,925. Anyway, that's really all I have for you this week. I hope you have a great holiday break, and we'll see you next year. Take care. Bye.